Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, before I proceed any further, wishing our viewers a very happy Dhanteras. And a very happy Dhanteras it has been, given the fact that, we staged a very strong comeback in the market in the second half of the session. From being down below that 24,200 mark, we've made a very sharp recovery to come back closer to that 24,500 mark, which, by the way, is being seen as a resistance level on the index. So 24,466 is where we ended the day. 127-point gain coming in on the Nifty. That's almost or over a 300-point recovery from morning lows. Sensex as well, 80,300 on the charts. A 350-point uptick on the Sensex, and the broader end of the markets also moved in tandem with benchmarks. In fact, the recovery was more pronounced there, with the Nifty Midcap index gaining as much as 1% or so. No points for guessing. It was a Nifty Bank index that was providing support today. A 1,000-point rally coming in on the Nifty Bank index, 52,320. It has reclaimed that 52,000 mark, 2% uptick. And even the Nifty PSU Bank index was helped by SBI. That was the top Nifty gainer, 5% gains coming in on SBI. And the Nifty PSU Bank index as well gaining in excess of 3%. This, by the way, after yesterday's 4% gain. So good going for the banking pack. And aside of that, if you look at the advance decline ratio, almost 3:2, 1,560 advances to 911 declines. So yes, the breadth was also fairly positive. And if you look at some of the other factors that was leading to a strong recovery across sectors, metals for one, rallied towards the end of the session, given the fact that there are reports claiming that China is considering further stimulus, to boost its property market. It could raise bonds worth somewhere around 4 trillion yuan to buy idle land and property. That, of course, propped up the metal pack, which, recovered quite smartly from the day's low to come back into the positive zone. But if you look at some of the other sectors that were not doing well and not participating in today's recovery, those are the likes of autos, FMCG, IT and pharma. All these pockets were under pressure. Of course, we had numbers to digest from Maruti. Not a pretty picture. That was the top Nifty loser today. We'll talk about that in just a bit. But let's take a look at some of the gainers first. SBI, as I mentioned, 5% gain coming in on SBI, which spruced up the entire Nifty PSU banking pack as well. Bharat Electronics was the other one that was gaining. Eicher Motors bucking the trend where autos are concerned. This was among the top Nifty gainers. So was SBI Life, HDFC Life, and ICICI Bank continues to gain, and even HDFC Bank was among the gainers today. On the flip side, Maruti, weak set of numbers. Street was fairly disappointed. Margin missed estimates, and the stock clearly reacting to that. The stock was actually under pressure throughout the session. Tata Motors hitting multi-month lows as well, and Hero MotoCorp, that was the other laggard from the auto pack on the Nifty. Aside of that, pharma wasn't doing well. Dr. Reddy's among losers, and Cipla, although it reported an inline to slightly beat kind of numbers, it was under selling pressure as well, and Bajaj Auto continues to lose. If you look at the broader end of the markets, quite a few movers and shakers there. Some stocks, of course, reacting to earnings. In terms of gainers, you had Syrma SGS. This stock extending gains from yesterday. Gillette as well reported numbers, Gillette India. That was up and about. JSW Infra as well, result reaction coming in. Deepak Fertilizer was doing well. Federal Bank, on the back of good numbers, this stock was also up somewhere around 9% or thereabouts. On the flip side, First Source, which revised its guidance higher yesterday, came under selling pressure today. This stock, of course, was among the top Nifty 500 gainers yesterday, but today under selling pressure. Sapphire Foods, KSB Pumps and Quest Corp, these were some of the other losers when it comes to the broader end of the markets. But then, let's talk about some of the stocks that are on our radar this afternoon. Of course, starting with Maruti, big disappointment in terms of margins as well as profit. Of course, profit was down somewhere around 17%. Revenue, although, was up 0.4%, slight beat on estimates. EBITDA was down 7.5%. Margin, 100 basis point contraction coming in there on a YY basis. In fact, margins came in, lowest in 5 quarters. Of course, low volumes impacted top line growth. The realizations were also flat on both a YY and quarter-on-quarter basis, although gross margins did see a minor improvement. The profitability was impacted by deferred tax expense of over 1,000 crore rupees during the quarter. And some of the other factors that weighed in on the profitability was withdrawal of indexation benefits and the LTCG tax change that was announced in the budget. These are some of the factors that impacted profitability. In fact, we had the management speaking at the presser post the numbers were released, and RC Bhargav, chairman, he just said that industry growth has been slower than the past, and autos have been, of course, witnessing a rough road. Demand for cars has slowed down. He says that he expects a reasonable quarter going forward, but growth will not be more than 3 to 4%. And he expects somewhere around 14% growth in retail sales during the festive season. Inventories are expected to come down to less than 30 days by end of the month. So these are some of the commentary coming in from the management. And RC Bhargav had also said that when you look at the festive sales, look at the retail sales and not wholesales. This was one point that he made. And he also said that festive sales, if you look at the retail numbers, will be fairly good. Aside of that, the other stock that was under pressure despite strong earnings was Bharti Airtel. Shares, in fact, fell to 1 month low. That was amid concerns over leadership changes. Let's first take a look at the numbers. Strong quarter. Operationally, it was in line. Although net profit was down 13.5% on a quarter-on-quarter basis, that was largely because of a one-time expense in terms of Africa business. Revenues had risen somewhere around 7.5% or so on a quarter-on-quarter basis. EBITDA was up, margin in fact was up 10.9%. Margin in fact had come in at 52.7% vis-a-vis 51.2% on a quarter-on-quarter basis. Look at the India mobile revenue business, that grew at 10.3% on a sequential basis. Of course, forex loss due to currency devaluation in Africa. This was the one-time impact that the company faced, and which is why it saw an impact on profitability. But of course, don't forget the fact that second quarter earnings were impacted by strong growth in the average revenue per user and increase in subscriber base as well. This was the quarter where you felt the impact of the tariff hike that the telecom companies took, which is what aided top line growth. ARPU growth, if you look at that, it came in at 233 rupees vis-a-vis 203 rupees compared to last year. Looking at the management changes, Gopal Vittal will be stepping down as the MD and CEO of the company effective 1st of Jan 2026. But he will assume additional responsibilities as Vice Chairman as a part of the transition. Now, Shashwat Sharma, who is currently the COO, has been appointed the CEO designate. Now, Sharma will officially take on the role of MD and CEO from 1st Jan of 2026. In fact, he has been with Airtel for as many as 6 years. If you look at what Bharti Airtel, what UBS has to say on Bharti Airtel, they have a neutral rating. Target price is at 15.95. They've noted that second quarter earnings were broadly in line with estimate, where revenue and EBITDA met expectations. And India mobile revenues grew on the back of recent tariff hike. Home broadband Africa and enterprise businesses, these were slightly ahead of estimates, and digital TV came in below expectation. But they've also pointed out that profit growth was 21% below expectations due to the exceptional loss. Citi, on the other hand, has maintained a buy rating, target price of 1950 rupees per share. There was a con call from Bharti Airtel in the afternoon where Gopal Vittal did allay some concerns. He said that he will take on some of the roles that Sunil Mittal plays today, and he will be spending time scaling up some of the incubation areas. And he also pointed out that he is fully committed to Bharti Group and there's no intention to take on anything outside the group. So there's a bit of allaying of concerns coming in from the management, but stock was down in trade. The other outperformer today was Federal Bank, clearly reacting to its numbers. Net profit grew by a little under 11% on a YY basis, and if you look at the GNPA ratio, that improved marginally vis-a-vis the previous quarter. It was a fairly good quarter. Loan growth had maintained its momentum. It was ahead of deposits growth. Deposits were a bit sluggish, but the contribution from CASA saw an improvement. Current account and saving accounts, that's the full form of CASA. There was a margin decline due to penal charge accounting change, but the actual margin saw an improvement, and fees and treasury income both lent solid support. Asset quality was strong, and low share of unsecured loans should help going forward. So that was of course about Federal Bank, but aside of that, if you look at what UBS has to say about Federal Bank, I just want to point out what the brokerages have rather said about Federal Bank's quarterly show. UBS has a buy call with the target price of 250 rupees per share. They've noted that the profitability, PAT beat, the beat on profitability was driven by lower credit cost in the second quarter. Asset quality has also been stable. The loan growth has been healthy, and CASA deposits, as I mentioned, have gone up 4% on a quarter-on-quarter basis. And another good point was the fact that management has maintained their previous FY25 guidance estimate. And, UBS believes that any clarity on the bank's strategy for improving margins could be a near-term catalyst for the stock. And aside of that, UBS also believes that the risk-reward for Federal Bank at the current juncture remains attractive. The last stock on my list is Spandana Sphoorty. Now, this stock was under intense selling pressure today. It slumped somewhere around 16 to 17% or thereabouts. Now it has shaved off almost 70% from its 52-week highs. If you look at this company, it's a rural-focused non-banking financial company, of course, NBFC, and a microfinance lender. And we've all seen that MFI space has been under severe stress, and which has also played out for other lenders like Kotak Bank, RBL Bank, IndusInd Bank, which of course saw such a sharp sell-off in Friday's session. Well, this particular NBFC was also, not spared because numbers were pretty bad. It had reported a Q2 loss, and asset quality has worsened significantly. Look at the net loss. It came at 204 crore rupees vis-a-vis a profit of 116 crore rupees in the same quarter last year. Although NII, the net interest income, has risen by 21%, NPAs, as I said, have almost doubled. The Q2 GNPA ratio is at 4.8% vis-a-vis 2.6% on a quarter-on-quarter basis. Provisions also saw a very sharp surge, 468% surge in provisions on a YY basis, 144% on a quarter-on-quarter basis. I beg your pardon. Now, the MFI space has been facing multiple headwinds over the last 2 quarters now. What are the factors impacting this sector? Elections, intense heat wave, and heavy rainfall and floods in certain states during July to September period. A number of other issues like higher than normal attrition levels and increasing leverage of borrowers, all of these factors also had an impact on the sector. Now, despite efforts to strengthen internal controls and focus on collections, the company continues to grapple with operational inefficiencies, rising borrowing costs, and weakened portfolio quality. Now, the management is cautiously optimistic going forward and is expecting some bit of normalization by the end of FY25. Let's take a look at what the brokerages are saying about Spandana. Now, Nuvama has downgraded the stock to hold from buy. The target price has been cut by over 40% to 520 rupees vis-a-vis 900 rupees earlier. Now, Nuvama has stated that the MFI stress may persist in the third quarter as well, and some bit of respite, if at all, is likely only in the fourth quarter. Now, another brokerage that has downgraded the company is JM Financial. They have downgraded the stock to hold. The target price has been revised to 500 rupees. They say that, the stock is valued at 0.9 times its FY26 book value per share. Now, the additional steps that have been taken by the company to control its credit costs would be beneficial over the medium term. That's what brokerages have said. But, brokerages are vigilant on the asset quality of the existing book. Looking at what Motilal Oswal has to say on Spandana, well, they have maintained a buy rating, and target price has been revised slightly lower to 540 rupees vis-a-vis 580 rupees earlier. As I mentioned, looking at the stock price, it has tanked around 65% on a YTD basis and 70% off from its 52-week high. So yes, under severe stress, Spandana Sphoorty due to what has been happening in the MFI space. Well, this sums up all the stocks that were on our radar this afternoon. We saw a very, very sharp recovery from the day's low. So yes, the festive cheer, it did appear like it had fizzled out in the morning after yesterday's rally. But then, once again, we saw a very good comeback by the bulls. And looks like, there is some bit of more sparkle left as we head into the moral session on the 1st of November. But now, let's see whether or not we are able to maintain this momentum or not, because experts have been pointing out that 24,500 will be a very crucial level to watch out for. And only if we close above that level, can you expect the index to actually retest levels of 24,700 or thereabouts ahead of the Muhurat session? Well, we have a few more sessions to go ahead of that. Let's see whether or not we manage to hit that level of 24,700 once again or not. or we continue to see heavy volatility and stocks flitting between gains and losses. So that's something we'll have to discover. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. But have a great evening. Stay tuned to Money Control for all your other news and updates, and come back and join us tomorrow morning on Opening Bell.